right, we should be live on YouTube. I'm just gonna post a link on Twitter and Discord so some people can join.
So how is everyone doing? Can everyone hear me? Can everyone hear George? So this is our fourth episode of Bitcoin Under the Loop. And so as the title says, we will take Bitcoin under the loop. So George will do all the technical analysis and I will try to do all the fundamental analysis at the moment. For my part, it will be mostly macro because in my eyes, Bitcoin is super correlated with all the macro events that just happened. And that's why I'm going to do that part right now. So George, everything okay on your side?
Yes, I'm just posting the link in Discord as well. It should be fixed now. Then I'm gonna share your screen. There we go. All right, just to make sure, can everyone hear me? Can everyone hear Jack? Welcome everyone. So like Jack just said, we'll take a look at Bitcoin from a TA perspective on my side and an FA perspective from Jack's side. We'll also answer all of your questions if you have any. So if you have any questions, feel free to just post them in the chat and we'll either answer them immediately or wait until the end and then cover them then. So yeah, if all the sounds are good, Jack, feel free to take it away.
All right, so just to dive right into it. So today, like I just said, I'll mostly be talking of the things which are important right now for Bitcoin and which currently is in my eyes the dollar. So the dollar is really strong because of the forward guidance that the Fed sets, so that they're not gonna cut a lot of interest rates in 2025, which impacts global liquidity. So it will be mostly the dollar, interest rates, and global liquidity, which all impacts Bitcoin, and that's where I'm gonna be talking about today. So to dive right in, are the interest rates. And this is the reason we dropped on last meeting, on the FOMC meeting. So the Fed cut their interest rates by 25 basis points. This was priced in. Everyone knew this was going to happen. But the thing we didn't expect and why Bitcoin dropped was what Fed Chairman Jay Powell said. And basically what he said was that they're going to slow things down and that they now forecast only 2 rate cuts in 2025, which was like 3 or 4 rate cuts before. And if we look at my screen right now, we see the Fed Fund futures from CME Group. So that's like the market which thinks how many rate cuts we're going to see in 2025. And so according to this, the market is pricing in only 1 rate cut in the whole 2025, which is not good for Bitcoin because when the rates stay high, the dollar is strong. When the dollar is strong, we know Bitcoin and dollar inversely correlated. And even if you don't believe that, we always knew, we always see in history when when the interest rates are high on the US dollar, Bitcoin is going down. So we see this still, the inception of Bitcoin, high rates is bad for Bitcoin. And that's why we just dropped. So only 1 rate cut. I don't think this will happen. I'm sure we will see 2 or more. 1 rate cut seems very, very low, but this is what the Fed chairman said. This is what the market is thinking at the moment. And this is why Bitcoin is dropping. So not many rate cuts, like I said, means a strong dollar. Strong dollar, just to show you guys, is inversely correlated with Bitcoin. So the times that we see Bitcoin dropping is the time when the dollar is moving up. So, well, when the DXY is going up, so the DXY is a basket of currencies weighted against the dollar. So always, and these bull markets we see in crypto is mostly correlated. Well, no, maybe that's not right, but it's usually correlated with the dollar going down. And so, yeah, why is that? And it's basically because a strong dollar, that just also means that the other central banks in the world also are not able to cut their interest rates. Why? Because then the dollar will even move stronger and stronger, and world leaders don't want too much currency volatility. They want that every currency over the world is not super volatile with all the other currencies. So they're not going to cut their interest rates as well. And the second thing is a strong dollar that also pushes down commodity prices. When we have low commodity prices, that pushes down the collateral, and hence you get less global liquidity. And so that's my next point. So we have interest rates that are not going to go down. So the dollar is getting stronger. Because the dollar is getting stronger, we will see lower and lower global liquidity. And for the guys that follow me, global liquidity, in my eyes, is the most important thing that drives Bitcoin's price. So I'm sure some people don't agree with me, but for me, global liquidity is the most important factor on how to value Bitcoin, how to invest in it, when you have to know when you sell, when to buy, and that's where I'm going to talk about a bit now. So global liquidity, here you can see it. So this is a chart of global liquidity next to Bitcoin. So we usually see big bull runs are times when global liquidity is moving upwards. So where is global liquidity headed? This is from Cross-Border Capital. So basically the inventor of global liquidity, well, not, of course you cannot invent it, but he laid the first groundwork and research of global liquidity. It's still the biggest person researching global liquidity at the moment. And according to his research, global liquidity shrank by 923 billion last week, and it's already going down since August. So, and in my eyes, this is one of the reasons we see the drop in Bitcoin. Maybe for viewers that don't follow me or don't follow Michael Howell and global liquidity. So global liquidity is just the flow of financial capital through financial markets. So basically that's all the money there is in the world. So global M2 money supply. It's also all the credit in the world by banks and shadow banks, and also all the cross-border capital flows. If you want to learn more about that, I just made a big video with Michael Howell himself about that. So go check it out. It's a bit difficult, but if you want to learn about it, go ahead. So like I said, it shrank by 923 billion last week, which is honestly not good for Bitcoin. That's the truth. And the main part, like I said, is that the US dollar is super strong. And also because the central bank liquidity growth have been holding liquidity in check as well, and mostly US liquidity. And this is my next slide. So basically US liquidity is going down week after week, month after month, which is one of the reasons why global liquidity is not going up. One thing I wanted to show, especially here today with George, is because we had a question last week. Someone said in chat, yeah, okay, you're talking about global liquidity, but what can I do with it? Because there is no lead time or there is no lag. So, okay, sure, it's going down, but I cannot do anything about it because Bitcoin went already down or up. How can I use this as an investor? And so basically, I have this for you guys. So basically, this is a Granger causality test to provide that there is a lead time between global liquidity and Bitcoin. So basically, it's a statistical sense, and you see the lead time of Bitcoin, which is about 11 to 13 weeks. There we see the correlation. So how can you play this? Well, if you see global liquidity going down, usually, I think it was about, if we follow the research from Lynn Eldon, she says it's about an 80% correlation. So 80% of the times when we see global liquidity going down, you can, so for 80% of the times, you can also guess that Bitcoin will go down. So that's one of the things you can use as an investor. So like I just said, Bitcoin went down this week, but Bitcoin already went down last couple of weeks as well. And I've got a very good chart for you guys to show. If Bitcoin should follow global liquidity, it should be trending downwards. And I'm sure you guys wanted to hear something else that was going to be super bullish, but if we just follow the global liquidity metric, we can expect a little bit more downwards pressure. Till how low? And there was a good chart. I don't know from who it was, but this one I liked very much. Just know this is only global M2, and global M2 is only about 40% of global liquidity, but it can give you a good measurement as well. So if you follow global M2, Bitcoin should go towards around 75,000, which is possible, which is a possibility. These levels like this, that don't work in my opinion. The only thing which works is the direction. So if you know global liquidity is going down already for 10 weeks in a row, to me, the direction of Bitcoin will be going down. The 75K number is that's not true. I think for to have like a good number where you can buy and where it's headed, I think it's better to listen to George and to do some technical analysis. To me, this is just to have the direction right. All right. So these were the three most important things, but for the rest, I still prepared some hopium. So this was a very good chart. And basically, this is the US dollar index, so the DXY, late upon the DXY from 2016 when Trump was going to be president as well. And it follows extremely, extremely well the direction that it did in 2016. And this is my only hopium. And Trump wants it as well because Trump wants a weaker dollar, which will boost export and which will create more jobs. So, which would be better for the economy. And if you look at this, so the dollar is also on its short-term high, and according to n squared value, so this is Timothy, Bitcoin, the DXY has like an 85% chance of reversing soon, so which would be very good for Bitcoin as well. I drew it on my chart here as well on TradingView, so I took the fractal from 2016, and it should be about to go down. So if we follow this, the trajectory of 2016, it's possible. I don't say that because this happened in 2016, it will happen again. No, but what can happen is Trump already said that the dollar is too strong and that he wants a weaker dollar. So maybe on the 20th of January, when the inauguration happens, maybe he's going to try to push the dollar down, which will happen to boost export and create more jobs. So let's see about that. At the moment, this is the reason global liquidity is trending down, because global liquidity is trending down, Bitcoin is going down as well. So moving on, another thing I've prepared for you guys as well is, so what I think will happen this month, since I think the dollar will be stable. We just saw the drop of the strong dollar and the global liquidity. So in what direction will Bitcoin move this month? And I think this will all have to do with the S&P. So the S&P and Bitcoin are extremely correlated. So, and in my eyes, these coming months, Bitcoin will just follow the trajectory of the S&P. And the thing is, in the S&P, we have the Santa rally. Well, we have it in Bitcoin as well, but it's really in financial markets, it's a known term. And basically is that from the 20th of December till the 5th of January, we have like a Santa rally where stocks perform better. Well, one of the best moves up over, well, in the whole year. So this is something that can happen as well. And I think Bitcoin will just follow in the footsteps of the S&P. So I think we have a good shot at a Santa rally. So this is specifically for the S&P. I searched and I found a good one for Bitcoin as well. And here, this is the performance each year for Bitcoin after Christmas till the 2nd of January. And when we look at history, there is a bigger chance that Bitcoin now will move up this week than down. So just looking at history, looking at the seasonality, we have a bigger chance of big move upwards than small move downwards. So this is some hopium I wanted to give you guys. If we look a bit better at the seasonality, we also just see when there is a green October and November, we usually see a green December. So green October, November, green December, we see this year after year. And I think we will see this December as well. Sorry, the only time we didn't see this when there was a 5x in November, so that's normal. Yeah, and that was it for me today. These were the most important things. Maybe one thing we can look at, and then it's good for me, is stablecoin liquidity. So as long as we see the stablecoin liquidity moving up, as long as they're keep getting printed USDC and USDT, Bitcoin will move up because there is just more money into the crypto ecosystem. So we can see this as well on TradingView. A little bit down today, like 0.10%, but that's nothing. So as long as this keeps going up, there's more stable coins to buy Bitcoin, which is good. And yeah, that's about it for me. Maybe one last thing. I'm not like a big TA guy or anything, but where you can buy according to the dropping global liquidity. So like I said, I don't believe the 75K target is right. So what I did and what I'm gonna do is I'm just gonna buy. I'm gonna put some buys here around the key June level. That's for me a very good buy opportunity. It's key June bounce. It's very well known if you follow the Ishimoku trading strategy. So I've put a buy here on like 87K, and yeah, that's about it for me, George. What do you think?
All right, very interesting as always. So thanks for that. I'm just gonna share my screen now, just to make sure. Can everyone see my screen now on stream? The Bitcoin chart.
Yeah, should be good.
Yes. All right. So yeah, like Jack said, interesting targets to the downside. As some of you might have seen, I called a really nice short from up here down into low 90k levels. I was targeting a little bit lower, but we'll get into that later. So what I'm gonna do today is start from a clean chart on the monthly. As usual, work our way through the different time frames, start on the high time frame, mark out those levels, and then come down to the lower time frames and yeah, see what we can work with and build up some plans. So on the monthly, very important level obviously is going to be the monthly open. And as you can see, we're currently below the monthly open, which generally isn't a good sign. Okay, you can use that level just to give you an idea of where the market is more likely to trade. Above the monthly open, it's likely that we trade a little bit higher. At least below, you can use that as a confirmation that we'll likely trade a little bit lower. Also important, last month's high. Gonna mark that out. Not sure if I have it. Yes, last month's high, like this. Last month's low, I'm not gonna mark that out because that level sits at 66k, and that's far away from current prices, and let's hope we don't see those prices anytime soon. But last month's high is definitely gonna be a key level on the lower time frames as well. Moving down to the weekly, gonna mark out the weekly open as well. Weekly open, there we are. And apart from that, maybe last week's low and last week's high gonna give us a clean range as well. So last week's high and last week's low, like this. Moving on to the daily, and as you'll see, you'll already get an idea of where we're currently trading at. We're slightly above the weekly open, slightly below the monthly open, but this area in general is going to be very key on the lower time frames as well. So like I said, we've been trending higher ever since we broke out of this reaccumulation range, right? We started pumping all the way up from the 17k lows. Significant moves, made an all-time high, and then started ranging forever. We always assumed, in general, and combining not only TA but just the halving, the election year, and all of that stuff, that all of this ranging was just accumulation that would lead to higher prices on Bitcoin, and that played out beautifully. We broke out initially a strong rally, but after that we've just been slowly grinding higher and higher. We haven't really seen acceleration yet, and so what you get then, either you get those higher highs and higher lows into a higher high, into a higher low, but without seeing a really fast move to the upside. So either you continue doing so and then accelerate into a lot of upsides, or the bounces are getting weaker and weaker, and you'll see a break of that structure. And whenever that happens, that usually leads to continuation to the downside. Okay, that's just talking about lower time frames. High time frame structure is still very bullish, but that was basically what I was seeing in this structure here. We saw on the low time frames as well. If you see these highs right here, we made a high, we made another high and another high, but every sweep was getting weaker and weaker. We started ranging a bit and then broke down here, and that told me that that the market was weak and gave me a very beautiful setup. And what I really like about these kind of setups is that you have a really close invalidation. So what led to this, I'm just talking about this low time frame down move right here. What led to that move? That was the sideways price action up here. People were accumulating shorts, people were shorting, sent price lower. So you just knew if this wanted to trade lower, we shouldn't break back above here, because whenever we would retest this area, those people who were accumulating shorts in that area will want to defend their positions, resulting in more selling pressure and lower prices. So not only was the invalidation really clean, but also the risk reward was very good as well. I'm not sure where exactly I shorted, but wherever in this consolidation you shorted, if you kept your stops above here, right, and you targeted, for example, I think I put my target all the way down to like mid 80Ks, but as I've said before, that was just an ultimate target. I'm never gonna hold a position fully towards my final target. I'm always gonna be taking profits along the way, and that's exactly what I did. So ultimately I would have been fully out of the position at mid 80Ks, but yeah, I took profits on every sweep of some lows, and right now I'm 85% out of shorts already, just holding 15%. So that was basically my thought process behind the short. Some more things that I kept in mind was, of course, the holidays were coming. That's always a time of low volatility, of low liquidity, I wanted to say. And just in general, right, everyone up here once again was euphoric. Everyone was calling way higher, and of course it's a bull market, and you're always gonna have that. But you know, the things just lined up that good. The risk reward, the clean invalidation. We're going into the holidays. It was worth for me to take a short here. It was, I think, my first short in months, and it played out beautifully. So now that we've talked about that, let me remove these levels again. What do we have now? So as I've said, my main target for the shorts were the lows down here, right? So as I talked about before, that structure of higher highs, higher lows, whenever that breaks down, usually the target would be the lowest low of that grinding up. So in this case, that would be these lows down here. And that still is in my opinion, a great target for Bitcoin and a very good buying opportunity if you get those lows. Are we gonna get them? Well, in my opinion, the longer we stay ranging right here, right, I don't think it's good that we stay much longer here if we want to see those lows. I think if we want to see them, they should come soon, and we want to see a quick wick and not like consistent selling, because consistent selling is way more bearish than a quick liquidation run to grab liquidity and a straight pump back towards where the cascade lower or where the down move started from. So right here, some key levels. Let me move these levels a bit more towards here, like this. Right, so all that we currently have at the moment, right? I'm not ultra bearish. I'm not ultra bullish on the low time frames, at least. So what do I think will happen? Well, basically we're simply trading in a range, okay? And what do we do in a range? We trade liquidity towards liquidity. We trade sweeps of key lows towards key highs and trade sweeps of key highs towards key lows. So when I was in the short, my main target for the short was these lows down here. Why these? Because in my opinion there was going to be a lot of liquidity resting below there, a lot of stops resting below there, and it would only be good to get them swept. And as you can see, what happened initially, huge red candle, swept the lows, closed below, but instant buyback, strong move back towards the origin where the move started. And then we saw some continuation, but didn't really impress because it was just a lower high that led to not to new lows, slightly higher low, but so far it hasn't really led to any significant upside. So that, in my opinion, is a little bit concerning, especially with the move that we had today, the down move. My initial target after, if we would have seen a sweep of last week's low or a sweep, just of these lows, was this high right here. You can check my Twitter for that. And as you can see, what did we do? We swept the high, quick sweep above into last month's high. As I said, those high time frame levels are always key on the lower time frames. And as you can see, ugly reaction. So technically, I would say we are sitting at demand right here, the origin of the move that led to the sweep of this high. But what concerns me a little bit is that we haven't taken liquidity below last week's low. We came very close towards last week's low on this move, but slightly front ran it. And after, what's more concerning, swept the high and got rejected pretty ugly. In my opinion, if this was the higher low that would lead to new highs, we should have seen a significant break above here, a reclaim of last month's high that would then lead to at least a retest of 104,000, somewhere like there, into supply, and above there to new highs. But instead, what did we see? Sweep and ugly rejection to the downside. So going forward, what do I think? What are the key areas that I would be watching? Well, what area do we need to break now in order for us to target higher? The local supply, the sideways price action here that led to this move down. If we reclaim this area and get above here, then I think we trade at least back towards 105 supply area, this sideways price action that led to all of this downside. So if that happens, we target higher. But as long as we stay below last month's high and below 100k, key level as well, by the way, psychological level, as long as we stay below there, I'm targeting a sweep of last week's low. And in my opinion, I'm not sure we're gonna get it, but it wouldn't be a bad thing to see a little bit lower. And while we're at it, and while we're trading down here, sweep all of the liquidity below here as well. So that's
the key thing, like I said.
Yeah, exactly. Lines up beautifully with your chart as well. You can see it right here, like the low time frame lows. But if you just take a look at the weekly chart and just a naked chart, remove all of your levels, you can already see where's weekly liquidity gonna be resting. Let me do it like this quickly. Where are all of these weekly lows resting? Well, that would be below here. And even here on this weekly candle, we said we barely had a wick to the downside. On this candle, we didn't have a wick, but that's fine as long as we run away from it as fast as possible. But from this weekly low, we didn't quite run away that far from it. We rejected here, now swept some lows, and now we're trading this close to all of these weekly lows. That, in my opinion, it would only be a good thing if we see a dip in there and then a rip higher. And that brings me to the ideal scenario for Bitcoin, and that would be ideally maybe, for example, now go for some lows but front run these, keep on ranging some upside, and then the monthly candle closes that would also, sorry, be the yearly candle closes. We put in the monthly and the yearly candle low in early in the year and in the month. Let's just say the monthly right now. So put in the monthly low early in the month, so straight move down. Ideally leave almost no wick to the upside, because then what would that happen then? If you get that sweep, where would liquidity then be resting? Definitely to the upside. So, and that would also just line up with like it's holidays, you know, everyone's taking some time off. I don't think we get any explosive moves right now. It's more likely that we range until some days, at least maybe some weeks into January, and then hopefully we just get it over with, put in the monthly low, and then just rip it up to new highs. That would be an ideal scenario for me, and I think for a lot of people that would be the best outcome. So my plan for my short right now, as I said, I've taken most off already. I'm holding 15%, that I'm targeting this low, and then I'll hold like just a tiny bit in case we sweep these lows. But more than likely, I'll be mostly out if we sweep that weekly low that I just talked about, and I'll be looking for swing longs going forward into 2025. Because do I think the high is in here for this cycle? Well, definitely not. Do I think we're gonna go straight to new highs? Well, also not. Especially when you get that structure like here and then get the sweep of the lows. It's unlikely that you do this and then straight to new highs. It's more likely, that you go for the sweep, then good reaction, then back down again for a retest, and then a lot of chop. Whenever you trade close to all-time highs, that's also usually what happens, because you get close to all-time high, everyone gets euphoric, everyone starts talking about all-time highs, then you usually get some fuckery to the downside again, and then whenever it's ready and when no one expects it, we run a lot higher. So what am I targeting for that? What I always use when you're trading into price discovery, because you have no levels to work with, is Fibonacci levels. And if we draw our Fibonacci right now, of course this wouldn't be correct if the low is not in, and I don't think it is in. But whenever we put in the low and we start grinding higher, what will my target be? Well, simply if you draw your Fibonacci from the high, the all-time high, to wherever the low is, if it is around mid 80Ks, well, then I would be targeting slightly above 120K and then 130K after. But we'll have to see about that. But that's basically how I want to play Bitcoin. I am going to be taking it easy with Bitcoin, since I think Ethereum and altcoins will have their moment as well. Ethereum, and I would say altcoins in generally, have underperformed massively. We haven't really seen a big rally yet, but I do think that Ethereum is gonna do some crazy stuff in 2025. So let's hope for that. We're not gonna cover altcoins or Ethereum. That's for a different stream. But in my opinion, in 2025, your focus should definitely be on Ethereum. Have some exposure. I know it's been a rough for Ethereum holders and Ethereum believers, me included. Luckily, I had a lot of Bitcoin as well. But I already rotated some into Ethereum on these dips that we got, and I'm definitely planning to add more if we see new local lows going into 2025. So that's gonna be it from me.
Great analysis, George. So you covered everything, and also what I wanted to say is you were one of the only guys that I saw on crypto Twitter or like in any Discord I am that was short, was publicly short, and just killed it these last few weeks. So
yeah, it's always combined with a little bit of luck. But yeah, I played this one very well. I also closed my old longs in time. Obviously, I'm down as well on spot holdings. I think everyone is, but at least my margin account is at all-time high, so that's good news.
Nice, well played, man.
Yeah.
Yeah, tell me what you want to do. If we can do some 5 or 10 minutes questions, if there
Yeah,
are any
sure.
in your chat. I had one question, but you covered it almost at the end, so I'm gonna show my screen real quick. So I had a question from Rage Jedi, and he asked, "Are y'all de-risking and selling alts or holding for Q1 seasonality?" So George, you said that we're not gonna cover alts, and which is true, we're not gonna cover alts, but I'm gonna just go over this real quick because this aligns a little bit with what I was saying just before.
Mm-hmm.
So,
Sure.
like I said, the seasonality and the Bitcoin monthly returns. Like I said, if we see a green October and a green November, we usually see a green December. Okay. At the moment, I still think we're gonna see green December. But if you want to look a bit further, look at the Ethereum monthly returns. Always in January, Ethereum performs way, way better than Bitcoin. So Ethereum in January has an average return of 23%, which is the best month, well, the second best month average of Ethereum's history. So that's something you can do. I know this is a Bitcoin stream, but I think January will be better for Ethereum for a lot of reasons, but also for the seasonality. And just on the question of are y'all de-risking, I don't know what you did, George, but I'm at the moment, so my spot holdings are about 30% in cash, mostly because of the global liquidity, which I explained. And the rest is in Ethereum. So at the
Mm-hmm.
moment, I don't have much Bitcoin. I don't know about you.
Well, I made a tweet about that like a couple days or weeks already ago. That I've started focusing more, yeah, on different ways. My spot Bitcoin holdings, at least, compared to your complete net worth, and more focused on timing. And since I don't think that the cycle is over yet, and we will be seeing all-time highs, and my Bitcoin holdings are percentage wise not that great yet compared to what I have in total, I decided that I wasn't gonna be selling my Bitcoin yet. Also, I personally added, I tweeted about that as well. Right before the elections, I deposited more money from the bank, and I immediately bought with half of that Bitcoin, Ethereum, and some altcoins as well, Binance Coin and stuff. And for that, it's a different story. I made great profits on that, and for that, I personally de-risked on Bitcoin and bought some more Ethereum. But it's also because I did that I can afford it now to just hold my other stacks of Bitcoin for way higher. I will be de-risking for sure, and that was my main target, like from way before, was around 120k. So that from that area, I will definitely be taking some profits and hopefully move some into altcoins and play alts well as well. But we'll have to see about that.
Yeah, I follow you there. I'm not really selling on a specific price target either. Maybe the only thing you can follow is like the Pi cycle top or the 2 year MA multiplier or what else is there, MVRV score. But mostly I'm just investing time based and it's mostly correlated with the global liquidity cycle, which is expected to top in late 2025, so in
Yeah.
Q4 2025, and that's when I will be selling. If Bitcoin is at 80k or 70k or 700k, well, I will be selling then. So it doesn't really matter for me at what price we are at that time.
Let's hope 700k.
Yeah.
No, all right. I don't have any more questions, so I
Yeah,
don't
we
know
can
if you
call it
have
here.
any.
It's perfect for me. We can call it. The stream was very good. We
We
went through it. We covered everything. I like it.
exactly. So yeah, guys, enjoy the holidays. I would say spend some time with your family. Enjoy New Year's Eve. Stay safe, everyone. I would say take some time off the markets. Like I said, we're not expecting anything crazy the next couple days to maybe even weeks towards the first days of January. So spend some time off, refresh and come back fresh in the new year. And yeah, Jack, we will talk soon.
Yeah, thanks, man. Thanks for the stream, and we'll see each other in a month, I guess, for a new stream.
Beautiful. All right. See you later, all. Bye.
Bye, guys. Thanks for watching.